A growing number of Americans are choosing to switch to local community banks. Community banks and credit unions are outperforming the banking industry as a whole. Henry Walker is the CEO of Farmers and Merchants Bank, a community bank based in LA. And I'm happy to say he joins the program now. Thanks so much for making time to speak to World Business Report, Henry. Now tell us, why are more Americans choosing to walk away from the big banks and going for community institutions instead?
Hi, thanks for having me on. What the marketplace is typically looking for at this point in time is service, as much as anything. The large banks just don't provide the service, and the smaller banks have the same requirements as larger banks for capital ratios. In fact, we know that there's not a bailout for us. We have to run safer and more sound than the larger banks because who's going to come to our rescue? We have to take care of ourselves. And the marketplace knows that. They know that they will get the service and the personal relationship that they used to be accustomed to years ago. And it moves markets.
And how are the big banks reacting to this? Are they trying to improve their service levels, maybe reopen some of those branches that were closed to compete or win back some of these customers?
No, they have a different business model. They compete on volume and price. They don't compete on service, and they have committed themselves to that business model. That's why they go ahead. And we were just reading an article here in the Wall Street Journal where a bank had come into a small town. It's now closed three, four offices, and the depositors in that town are looking for service. They're looking for something different. And so, this is again what we see in the marketplace. And we happen to be in the LA Orange County marketplace, a very dynamic market with a lot of opportunity.
And we were just speaking to Deanna, and before that, a colleague at Marketplace, Lily Jamali, about what happened at Silicon Valley Bank and again, what's happening now with the wobbles at NYCB. So I
hmm
suppose, there is some, I guess, bad press around the smaller banks, and yet people aren't worried. I guess it's because of that deposit guarantee scheme that there is in the US.
The are you well? We certainly there's a level of deposits that are guaranteed by the FDIC, and it was in 2008 they raised it from 100,000 to 250,000. And there was a lot of ways to work the rules around that to make sure somebody's covered. But candidly, 98% of the people don't have $200,000 in their bank account. And so most people are very adequately covered. And it even worked well in 2008 because the FDIC insurance, what it does, it keeps or should keep people from having a run on the bank. And, we watched very comfortably in 2008 what went on in the marketplace. And we again watched here what happened as we had both SVB and First Republic be damaged.
And just briefly, there is, though, a smaller number of choice, I guess, when it comes to choosing a smaller bank because there are a lot of mergers in the sector. Tell us about that.
Yeah, there is consolidation. When I got into banking back in 1987, there was about 18,000 banks in the country, and today there's 4,500 banks. So we have seen big consolidation, and there's two things that kind of drive it, in my opinion. One is the cost of running a bank, both meeting the regulatory demands, and the regulatory demands are high for good reason to keep us safe and sound, and the cost of technology and running a back office. Both these things are very expensive, and so what happens is the smaller banks end up merging to create economies of scale.
All right.
And I
Well, we're going to have to leave it there, but thank you so much, Henry Walker, joining us there, the CEO of Farmers and Merchants Bank in LA. And this is World Business Report from the BBC World Service.